Speak of another stock, Reliance Capital saw a muted profit in first quarter because of that one-time dividend payment for Reliance Nippon Life Insurance. The company also is going to sell part of its stake in its general insurance business within this fiscal. Our correspondent Kevin Lee caught up with Sam Ghosh, and he began by asking him first the highlights of the quarter's performance.
So if you look at overall, our profits have gone up to 207 crores, up 3%. But if you exclude last year, we had a dividend payment from our life insurance business, which now is being consolidated. So if you take that dividend out, actually our profits have gone up nearly 33%. So all our businesses have performed well. In terms of top line also, we've shown a 3,700 crores in terms of top line income, which means a growth of nearly 30%. So top line growth has happened. If you look at now business by business, our commercial finance business, our lending business, Reliance Commercial Finance, AUMs are nearly 17,000 crores now. So it's up nearly over 15%. And profits are also up nearly 30% to over 57 crores. And then in that business also, our net interest margin now at about 6.8%, is one of the all-time highs for us. If you look at our housing finance business, again, our housing finance AUMs are nearly 8,300 crores, up nearly 30%. Profits are at about 30 crores for that business, and net interest margins seem to be about 3.5, 3.6%. Moving on to our asset management business. In asset management, our profits are nearly 122 crores, up over 15%. And if you look at overall assets, total assets under management also, it's 1 lakh for mutual fund assets under management rather, it's 1,67,000 crores, up 15%. And total assets under management, which includes all our EPFO funding, etc., is nearly 3 lakh crores. So that business also is growing at a fairly good rate. Moving on to our insurance businesses, in our life insurance business now, our total income is at about 450 crores, so 650 crores rather, and renewal premiums are about 450 crores, so new business premiums going up. Here we focus mainly on traditional products. 85% of our business is traditional, and our, if you look at in terms of our persistency, that's also over 60%, so that's growing at a fairly healthy rate. Moving on to our general insurance business, in general insurance also we have shown a slight growth in our new business in gross written premium. That's grown about 5 to 10%. However, if you look at in terms of profits have grown over 23% and nearly 36 crores. So again, shown a fairly healthy growth in profits. And we know that for general insurance also, gross written premium will start growing quite substantially. We'll be above 10% growth rates from next quarter onwards. And broking and distribution, finally, the smallest business of ours, that also in the past was showing losses, now it's at break even. So now we expect to show profits going forward.
Now, speaking first about your commercial finance business, disbursements have grown over 10%. What is your guidance for this in FY17? And could you also highlight the NPAs separately for commercial and home finance?
Sure. See, if you look at in our commercial finance, growth has been 17%. We expect that for the whole year, we'll show about 15 to 17% growth in terms of disbursements. And that is we've been doing that consistently in the past. In terms of NPA levels, NPAs in commercial finance is about 3.3%, and primarily from the commercial vehicle side. So again, we've been slowly reducing that book gradually, and that will continue to go down. However, the other books, the SME book and the LAP book has been at about less than 1 to 1.2%. So it's fairly stable. In our housing finance, our total NPAs are at about 1%. So again, we're very happy with the situation there. And we obviously report on a 90-day basis.
Speaking about your housing finance now, can you give us the breakup of your assets under management for housing finance, construction finance, and LAP?
Yeah, sure. So if you look at in terms of housing finance, it's about 57% is home loans. Construction finance is about 16 to 17%, and the balance is loan against property. And we expect that we will continue keeping that sort of ratio, because basically you have to obviously do over 50% home loans, which includes construction finance, and obviously LAP, so that you can get good yields as well as to be able to continue growing your housing finance book.
Well, coming now to mutual funds, last quarter you had given a guidance of 15 to 20% where your assets under management are concerned for Reliance mutual funds. How much have SIPs helped you achieve that? Because you've hit 15% growth. So how much have SIPs contributed?
So SIPs now are growing at about 20 to 25%, primarily because we have about 1.4 million SIPs and STPs, and we have been very strong in the smaller towns. So if you go below top 15 cities, our average assets under management is the highest.
Okay, that was Sam Ghosh. Let's